Welcome to another episode of our best interest rate. This is based on our rate sheet, February 8, 2018. As many of you know, we at Mortgage Center have our own mortgages available under the brand name Centrex Mortgage. It's one of the most competitive interest rate in the business. Just to show you today's best rate, as you can see in this highlighted portion, is prime minus 1%. This is a variable rate. We call that the low rate advantage mortgage. We also have a 5-year fixed rate at 3.19%. Oh, by the way, prime minus 1% translates to 2.45% when it comes to the variable rate. Now, as many of you know, what you see is not always what you get. In order to get these two mortgage rates that we have mentioned, it is available only for purchases and or switches or transfer. Purchases are obvious when you purchase a new home. Switches and transfer are mortgages transfer from one financial institution to another without asking for any more money. So if that is the case, and it is a high ratio mortgage, if you notice listed here under high ratio, meaning CMHC fee will be paid and qualified under the CMHC guideline. In the case of the switches, that the mortgage is already CMHC insured, you get the best interest rate available. Now, in the case where someone have more than 20% down payment, in the case where CMHC is not insurance is not necessary, then the pricing structure is different. As you can see in this diagram, in this rate chart here, if you have 40% or higher for down payment, then you see the best rate that we mentioned still applied. That is prime minus 1% in the variable rate and 3.19% for a fixed rate. However, if your down payment is less than 40%, but more than 30%, so in the case where we have here, under the 60 to 70% loan to value, you will see that the discounting structure is not as well. So in this case, the variable rate is prime minus 0.9%, and the rate gone up to 3.14. Whereas in the case where there are only 20 to 30% down payment, the rate is slightly higher. So instead of prime minus 0.1, the variable is prime minus 0.65 with a 5-year rate at 3.4%. Now these are what we call the insurable mortgage, meaning your mortgage must meet CMHC insurance guideline. However, there are times that we don't always do things that are insurable. So as in the case, perhaps we're looking for a 30-year amortization. Yes, 30-year amortization is still available with limited number of lenders. The advantage of 30-year amortization is it reduces the monthly payment substantially. So in this case, for purchase, the interest rate is higher at 3.64% or prime minus 0.5% as a variable rate. Now, for those who are not looking for a purchase, so in the case of what we call a refinance or equity takeout, meaning you want to increase your mortgage to a larger mortgage, in that case, the rate is quite a bit higher. So instead of the 3.19 we can get with an insured mortgage, the rate is now up to 3.74% or prime minus 0.4. So when you're shopping for best rate, you need to know your circumstances. You need to know whether you meet the lender's guideline, and also what is the loan to value to your mortgage, whether it's a purchase or a refinance, whether you want something outside the insurance guideline or not. That all determines on the mortgage rate you can get today. And then there are other factors that we won't spend much time on. That is the credit rating. Not everybody are treated equally. So if you have a better credit rating, you would have a better chance of getting a higher rate. Thank you again for looking at our best rate available.